What's up, guys? Just wanted to give a quick shout out to today's sponsor, Aptos. We'll hear more about how Bitcoin DeFi and Aptos is heating up later today, but for now, let's get into the episode. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey, good morning. Welcome back to the Friday live stream, 0x Research. I'm joined, as always, by my co-host, Boccaccio. And today we've got a special guest, Olivier, joining us from KAIO. How's everyone doing today? Olivier, glad to have you on. How are you?
Awesome to be here. Hey, guys. Yeah, I'm very good.
Awesome. We wanted to chat about what you guys are building over at KAIO. Before we jump into anything, though, maybe just some quick shout outs. I want to give a thank you to Aptos, sponsored today's stream. Also, Boccaccio. I think we have a free report out now.
Yeah, we do.
For anyone that signs up for the 0x Research newsletter, I think.
Yeah, we do. I'm a bit worried I'm super buggy, Danny. I realized I should have probably checked the tech before I hopped on, but we do have a free report out for MetaDAO, which we wrote a month ago, but you can get an update on everything that's happening with them with Futarchy. Less Futarchy, actually, more about their new capital formation platform. So make sure we'll put the link in the show notes, so make sure to sign up to that. Olivier, nice to meet you. And nice to chat with you. Danny, how do you want to get started?
Yeah, let's jump into it. Was interested, kind of heard a little bit about what you guys were building. I was not familiar with KAIO prior to maybe a week ago, but I guess the basic gist that I have is you guys are bringing like interesting funds on chain and tokenizing them. I guess I'd love if you can just kind of talk to us about the background, like what KAIO is and is doing, what you're building. Maybe what sort of inspired the creation here, and we'll go from there.
Yeah, awesome. Thanks again, guys, for having me on the show. So it all started, I would say, 3 years ago. I'm still at, Laser Digital. It's a crypto entity fully backed by a Japanese bank called Nomura, and running the venture arm of Laser Digital. And I was looking to invest in a RWA platform. There's definitely a view as being backed by a global bank that many financial products will move on chain. And we had actually a strong view that not necessarily your bonds and equities, because it's relatively kind of liquid instrument, but more of the things that are difficult to get access to. And I couldn't find anything to invest in. And so we gave a call to our friends at Braven Award and say, why don't we incubate something together? You guys are running one of the largest macro hedge fund in the world. We understand very well, traditional finance. We both into crypto as well. Let's build something together. And so that's what we did. We started to, put pen to paper and think about the best way to bring alternative assets on chain. And why alternative asset? Because it's probably one of the most difficult financial product to access for traditional retail investor, but at the same time has significant scale. So yes, it's difficult to access art and classic cars and so on. There is some merit to tokenize that, but in reality, there is not a deep market for that. Whereas hedge fund, private equity, private credit, there is a significant demand for that. But still, if you want to access with your $10,000 kind of a brokerage account, it's almost impossible. You need to have, a private bank account with a few millions, and then maybe you get access to the right hedge fund or the right credit fund. And so we thought, tokenization was really a perfect match for this asset class. And we started to design that, launch a kind of a alpha version about a couple of months ago. Started to accumulate close to 200 million of TBL on 4 different funds. And now we are scaling up. We're doing a raise. We're going to launch a governance token soon that will really help us accelerate the KAIO plan and ramp up across additional kind of funds that we want to tokenize, and also really thinking about a distribution that will allow us to offer that to retail. Today is still for accredited investors, but when you say accredited, you can enter with 100K check size as opposed to a few million. So that's already a improvement. But I really want to make this accessible to retail, so that with 1K you can come and access various kind of alternative funds that are difficult to get to today. So that's really the vision that we have. We want to bring all of those funds on chain, and I'll explain a bit more what we mean also by on chain. It's not just tokenization; it's the composability of those tokens into DeFi that we think is also extremely important. Otherwise, you just maybe make this a bit more accessible, but not yet fully benefiting from what on-chain finance can offer you. So yeah, that was the vision. Super excited. Now it's around 25 people in the team. We have very strong backers. We have Laser Digital, Breven Award. We have a few investors from the Middle East that are helping us scale there. So yeah, it's a good time to be in RWA, I think.
Very cool. I think it makes a lot of sense. What I think is interesting, like we've seen a lot of products come out that are focused on bringing, like U.S. Treasuries on chain, bringing stocks on chain. Which I think you mentioned. A lot of things that are kind of currently already pretty liquid. At least maybe if you're a U.S. individual, for example, you can already trade stocks at a brokerage with a ton of liquidity. So trading them on chain, it's maybe an unlock for sort of the rest of the world. I guess why is the thesis for bringing some of these funds? You mentioned the access in terms of maybe target sort of size that an individual might have access to, and then therefore the type of funds they have access to today, kind of in the traditional market. Is there anything else different about like bringing these types of funds on chain that is not quite the case for bringing like a stock or USTs on chain?
Yeah, I mean, as you pointed out, stock, treasuries, super liquid, very easy to access, funds very hard, very intransparent around, the settlement time, the fees, and so on. So we're trying to improve all of that through the on-chain infrastructure building. And then we're also trying to bring what you currently have as an ultra high net worth. You have, let's say, a $1 million parked into a credit fund, you can get a loan from your bank, at various LTV and so on. Very hard again to get access to this if you are retail. And here, your token representing your credit fund, your hedge fund are accessible and composable into DeFi. So you can then use that into either Horizon or Camino and potentially get, use that as collateral and get some funding on the back of this. And that's what we want to unlock, this composability that is available in DeFi, but using underlying that are more the kind of the credit fund, the hedge fund, the more complex instruments for pure alpha or for yield generation. Yeah, that's what it is. We also have a treasury fund. Most of our clients, they also want treasury, and there's lots of reason for that, and it makes sense. But that's really a product that we have. So the 4 funds we have a BlackRock money market fund. We have a Breven Award hedge fund. This is one of the longest running macro hedge fund in the world that we have tokenized. We have a Hamilton Lane private credit fund. That's also very attractive to many investors to get this type of yield of 8 to 10% in real world credit. And then we have also tokenized a Laser Digital carry fund. This is more a crypto fund, but that extracts yield and then hedge a position, so it's market neutral. And again, quite maybe easy to access if you are ultra high net worth, much more difficult if you are, like a everyday guy wanting to get some of that product. And so that's what we focus on. And the fund are tokenized on Ethereum mainnet right now, but we have also built KAIO gateways that allows us to bridge in, I think, close to 10 different chains that we have put in place now. So it's available on Solana, on Hedera, on Say, on Aptos, on Sui. I think we're launching Tone as well. So there's a lot of benefit in the way we've designed that allows then through the gateways to make those funds representing those tokens available in different kind of L1 and L2s. And that's interesting because certain people obviously prefer the various chains. Certain distributor we're speaking to who are also building their own chain. They want those funds to be distributed on their own L1 or L2. So the way we design that allows us really to achieve this. and we, in a way, had the benefit of starting later compared to some of the other tokenization play out there that have maybe a more monolithic approach where, you have a small platform almost as opposed to protocol. So once you've done the tokenization, all of the logic stays in a offline database. For us, all of the logic of the fund is in a smart contract. And what I mean by that is because it's finance regulated, there's always complexity around who you're allowed to distribute to, who you're allowed to market this to, and all of that logic is embedded directly in the smart contract. So let's say I have a fund that I have tokenized, but for any reason it's not available to resident of, I'm making this up, Germany. Well, if we have working with a crypto exchange who's distributing that, they can look at the smart contract and realize, okay, that is not allowed to a German resident. So then they're blocking directly the distribution. You can do that only because that we've had seamless experience, only because we have embedded all of the logic of the documentation of the funds on chain, as opposed to maybe this old approach. I would call it tokenization 1.0. We are really tokenization 2.0. It's really something that exists and lives on chain compared to the previous version of tokenization.
That makes sense. So you basically, the strategy has been sort of agnostic to the underlying chains. It's sort of we just want to put the products on chain if our customers or distributors, suppliers, whoever else have a particular interest, like, we can fulfill that, but don't need to take a preference sort of out the gate. That's not our concern. I think that makes a lot of sense kind of in this, especially where we are today, where, you've got several sort of big environments. People have their preferences, like you say, and funds kind of move around to these different on-chain environments.
Yeah, and I'm not the right person to select the winners, of the L1, L2 wars. That I'm agnostic to that. But what we want is really select the best managers, and that's why we decided from the get-go to work with a highest quality name in finance. Hamilton Lane is $1 trillion alternative asset manager. Laser is backed by Nomura, obviously BlackRock. So working with those top tier one investment manager and convincing them to work with KAIO give us the credibility and the confidence to say that we are, able to bring the best institutional funds and move them on chain and make them accessible to as wide a population that we can, based on the distribution agreement that we have.
I'm curious how you think about fragmentation in that sense of, you said you're agnostic, which I think makes sense. You shouldn't, especially in your like you guys' role and what you're trying to offer. It doesn't make much sense to be particularly focused on like whatever performance. But I'm curious how you think about fragmentation in terms of offering products across. You said Ethereum, Solana, which to me makes sense, and then Hedera and Say maybe makes a little less from my perspective, because I'm mostly focused on like a different type of, I guess, like product. So like curious how you guys think about fragmentation in that sense, or is it more like we want to be on as many chains as possible, we don't really care that much about it?
Yes, we want to be on as many relevant chains as possible, I would say. So we partner with a foundation. They're keen to also build up their credibility when it comes to RWA and when it comes to institutional grade product on their chain. And the model we have on the gateways is, if we get support from the foundation with a few developers, we're able to build those gateways in less than a month, even faster if it's EVM. So for us, it's not necessarily a complex thing to add a new gateway. And if that helps the foundation, that broadens our distribution because they have certain kind of capabilities that they can reach out in terms of investors, or if they have a specific DEX where they feel there could be a lot of liquidity on that DEX, then we are relatively agnostic there. So in a sense, the fragmentation is not something we are thinking too much about and are too concerned by. But obviously, we won't go and tokenize on a chain where we feel, for different reasons, it's not, I would say, institutional grade or finance ready, I would say. And so, trying to make sure that at least the chains we're working on have at least this appetite for moving towards maybe the more institutional side of blockchain. Yeah.
And how has appetite for KAIO grown over the past few months? Like, I imagine initial launch was it difficult to pitch this to people, or was it very much like people got it almost instantly, the idea, and they were on board?
I think there is a pretty good support for the concept, of moving those type of product in a tokenized format. Maybe taking a step back, even you have this stablecoin supportive regulation in the US. So you have hundreds of millions of fiat moving on chain. What's going to happen to that stablecoin? Yes, some of that will go into investment in Bitcoin and ETH and maybe some of the top coins, but not everybody will want to buy a meme coin or a shit coin. So there's lots of investors are going to come on chain in terms of digital fiat, and then they'll need financial product to deploy and get some yield or some strategic pure returns on that. So the investment thesis has this virtuous circle of more digital fiat needs more digital product to invest in, and you don't want to go on once you are in digital dollar having to go back into, I would call them analog product. What I mean by that, even if you have tokenized a product, but all of the backend is still in PDF and in off-chain database, you not really achieve much. So what I think the investment thesis resonates a lot in that you have no fully understood concept of digital money, digital fiat. No, it needs digital product to invest in. So in that sense, the pitch was good with partners and investors. I would say the challenge for many of the tokenization kind of players is still on the distribution. Now you need to convince people to move on chain and start to put money into those type of products. We have, I think, good kind of initial track record with 200 million of TVL. We have a pipeline for close to $1 billion in the next couple of months. But what, and obviously the first billion is probably the hardest, but to want to be is like having, 10, 20, $50 billion of AUM offered through different distribution channel to clients.
Something I wanted to ask about and curious your thoughts here is we've seen, like at least in the US, there's been some discussion, Trump and the current administration talking about, we want to open up 401ks, for example, to private equity, private credit, some of these different vehicles that, previously they weren't able to access. Some of the criticism, I guess, of this kind of like broader trend is people are saying, is this opening up retail or, other investors to maybe like an adverse selection bias? Are they being given like kind of like the bottom of the barrel stuff that they couldn't fill with, their more meaningful, higher net worth clients? I guess what's your thinking on that in regards to this, or just maybe the broader trend here of like opening up more of these funds to retail who traditionally have not had access?
Right. Yeah. I mean, it's like everything. You need to do your research before, investing, whether it is a stock, a bond or an alternative funds. We are very cautious when it comes to the managers we want to work with. We check their track record. We make sure that they are coming with all of the kind of a necessary risk framework and ability to manage both in good times and bad times the investment performance. So at least on our side, we're making sure that we are going to tokenize some of the highest quality names, and we have rejected already managers who have come to us and say, I'd like to tokenize my fund XYZ, and we look at that and we're not entirely sure we want to be associated with names like that. So for retail through their 401k, having access to a broader list of kind of alternative assets, I would say it's the same that they do in their kind of research with regards to equity. It's there's probably still a concentration of performance to top manager. We see that in VC, in PE, in credit, compared to the long tail of manager that don't necessarily have research depth or track record or risk framework to be able to generate returns across market cycle. I come from traditional finance. I spent many years in TradFi, and it's no guarantee of being able to select the right name by no means, but at least I know what to check, and we can remove some of the maybe more questionable players. Maybe it means we'll miss a top fund that has less track record, and we could have tokenized that, and that's in a way that's okay. I'm not in the business of selecting the most performing fund going forward, but I want to make sure that at least on KAIO, the funds that we'll make available are funds that have a very strong reputation. Yeah, they could still be failures, and your point on adverse selection in retail, I think, is very real. We're not necessarily solving for that. I'm not sure we'll be able to offer our tokenized funds at any point in the short term to a pension provider in the US. There are, I'm sure, lots of complexity, and today we cannot do that. But if we are one day able to do this, I think we'd want to make sure that at least the funds that we have on our platform have passed our due diligence in terms of the quality of the management.
Awesome. Yeah.
Go
ahead, Bach.
Is regulation catching up as you guys expect on your end? Because to me, I guess I've kept up with some of the regulation, but I think, like you mentioned, a lot of it has been stablecoin focused so far, as well as I guess some trading stuff like futures, perpetuals, etc. But I haven't seen that much on private fund allocations, etc. Is it catching up? Are you excited?
I think it does, and maybe to your point, in the US, it's been, and rightly so, I think, more focused on stablecoin, because you need, that was the biggest issue. Getting on ramp. If you don't solve for this, there's no point tokenizing whatever you want. It will be difficult still to find demand. So I think it was the right thing to do in the US. MiCA in Europe kind of provides a framework for stablecoin as well as tokenization of assets. There are jurisdiction in the Middle East that are also very thoughtful when it comes to the full value chain, from on-ramp, off-ramp to securities on-chain to alternative assets on-chain. I think still the challenge with regulation is this fragmentation across jurisdiction. For a startup like us, having to understand all the reg globally, I mean, that's tricky. So what it means is we take a very cautious approach as to where we can market, where we can distribute. We don't have yet the size and the capability to go and check every jurisdiction in the world, or at least even the main one, to see what we're allowed to do. So, but regulatory fragmentation still is very, I don't think it's going to improve anytime soon, unfortunately. So we have to live with that. And what it means is that certain jurisdictions are going to be more difficult, and you're going to have more regional players. I think KAIO is very well positioned with the backers that we have to be a leading force in, let's say, Asia, Europe, Middle East. US, you have strong names already when it comes to tokenization of maybe slightly different products to us, but for us, US is going to be a market. We're going to be cautious. We want to be there, but it's we need to be sure about the reg. We've seen too many times how if you cross the US regulators the wrong way, it's very hard to recover, and no intention of doing that ever. Yeah.
That makes sense. I'm curious your thoughts on, and this is probably a question you could ask any team within the crypto space, but to the point around RWAs and stablecoins, I think we're seeing more and more large legacy TradFi institutions, managers, etc., start talking about their own initiatives to build out products in this realm. I guess I'd be curious if there's any concern or risk from your POV that a BlackRock or some of these other large names might roll out their own kind of built-in products to offer some of these funds, for example, on chain, versus going through a KAIO.
Yeah, look, I spent, like I say, many years in TradFi, and you have to go through so many hoops and committees and whatever. But by the time they catch up to putting a product out, the industry would have moved. And what I'm saying is our funds are composable in DeFi on Aave, Horizon, and Camino. We need to deal through the KYC and ML through different approach. But by the time a large TradFi puts its token representing one of their fund on the chain, it could be on a permission chain because we're not able to meet compliance requirements when it comes to a public blockchain. And even if they get there, by the time they are able to get their compliance comfortable on that, the industry will have moved to on-chain. And then you want the composability of your token. Otherwise, what's the point? You get maybe a slightly faster settlement time and a slightly cheaper entry point because it's on-chain. But I call that IT improvement. It's not transformation of finance. We are wanting to build a new value chain for finance. I personally think a startup is going to be able to do that, or at least a company that operates at a pace where there's less vested interest, regulatory constraint, even cannibalization of your own distribution channel and so on. All of those traditional players have to think a lot about this, and we have none of that constraint. And yeah, they have very inherent strengths around distribution, maybe around, like I say, understanding regulation globally. But that doesn't offset the pace, the inability to move at a pace that crypto moves at. So I'm not concerned, And yeah, maybe in 10 years we'll get there, but who knows what will happen in 10 years? And we've been long enough in crypto not to worry about the next 10 years. I think let's navigate the next 1 or 2.
Yeah, maybe just to follow that up, like are your current clients sort of validating that thesis for you? Like they're interested in kind of exploring some of these tokenized products, but it's it's just not something that they're going to pursue in a big scale or could pursue immediate term kind of in-house. So it makes sense for them to kind of reach out to you and to explore.
100%. And for many of them, I would say they pass the experimentation. They want to launch something, but the cost of doing that internally, the need to navigate internally, is sometimes just extremely challenging. So they prefer to work with a third party. They learn from that. They get potentially exposure for strategic participation or close strategic alignment, and that resonates with many of the TradFi and players that we've been in touch and we are speaking to. For us today, lots of our investors are still crypto players, people who are already in crypto. We still need to do, as an industry, I think a lot of work to convince, somebody who's not yet in crypto to come and invest into some of those on-chain products. But it will come. I think we've passed the tipping point now for RWA, and it's just a matter of changing culture, legacy system, and starting to have some of that gradual acceleration. And it's getting there. I think I'm very confident.
Well, I think we're starting to run over on time here, but maybe to round things out, I guess, kind of what are you looking forward to, I guess, for KAIO over the next 6, 12, 18 months? Is it a more variety of funds offered on the platform, or just continuing that grind of getting more customers interested, more partners interested in exploring it?
Yeah, we're launching what's exciting me the most now, we're launching a retail version of our product that will be accessible on a non-KYC basis, and it will be almost think of it as an index. We'll wrap 3 of our yield fund into, we haven't fully decided the weight, but you'll have a treasury, real world credit, and crypto market neutral yield. We'll wrap that into a token that will be made available to the earn program of various exchanges or even directly on DeFi. And that's great. I don't know if we're entering into risk off, I don't know, but at some point we will. The cycle means that people who will want some yield, and right now the choice are what? US Treasury yield or crypto native yield that has its own inherent risk with smart contract and whatever. Here we're going to offer something that mix and diversify real world yield, credit, and treasury with crypto yield. That's, I think, is going to be super exciting. Again, I'm not advocating or wishing for a downturn, but that product will be there, and it will be, I think, super exciting for people who are looking to get some yield and staying in crypto, and that will be retail accessible. So I'm very bullish on this one.
Awesome, very cool. Bach, did you have anything else? Any last questions?
No, I mean, I would want to ask about I think I'm gonna wait and see, because I'm excited about this retail product. I just want to see how it's going to work. It sounds ambitious, but it also sounds very exciting. I'm excited to see how it works out.
Yeah, maybe we do another discussion in in 2-3 months.
Yeah.
We'll be able to launch this one, and I'd love to come back on the show here and talk a little more about this one. Yeah, absolutely.
Awesome.
Yeah,
Well,
love
I definitely agree with your point. When there are downturns, at least within crypto, they all start talking about stablecoin yields even more than they were before. And stablecoin yields right now are already, I think, a pretty hot topic with. We've got Athena and various other products that have kind of exploded this past year. But awesome. Well, it was great to have you on, Olivier. Great to chat all things KAIO, and we'll definitely keep in touch as you roll out that next product.
Thanks, Danny. Thanks, Bob. Great to be on the show. Thank you, guys.
Awesome. Thanks so much. Have a good one.
Bye.
All right. Before we jump into anything else, great conversation with Olivier. Was glad to have him on. Interesting product. I guess maybe it's just my takeaway generally is like there's like a million teams that are bringing treasuries on chain in a different wrapped form, like quite literally like 10, 20 projects that have done that. But I don't really see any teams exploring this particular angle of like private funds, hedge funds, private credit. So it's unique in that aspect, and no one else is really doing it.
It's cool. To be fair, private credit is done quite a bit. I just like allowing access into specific funds is cool. And it's almost like kind of front running what will likely happen anyway. Like if you're gonna use stablecoins for settlement, it makes sense. Just use stablecoins to give to funds. The reason I asked about regulation is because I genuinely don't know what the regulation is, and to me, this product seems like regulation just hasn't caught up to it yet. It's the same as like what stablecoins were like 2 years ago, 3 years ago, right? And like how I think private credit, etc., is probably like right now. And I feel like this regulation for this will catch up in 3 years. Private credit will catch up like this next year. But it's exciting. I like it. It's cool. I don't know how. The reason I bring up regulation is because, I mean, the funds that they're choosing are very good funds. But there's still a chance that something goes awry and something doesn't go right. And then it's like, that's when you kind of need, from what I understand, that's kind of when you need regulation. Although, like I said, I'm not a professional. So
yeah, I guess the upside is, they've taken the sort of accredited investor approach to start things off. So I think on the regulatory side, they're safe. It's seemingly safe for the moment, at least from that regard. But yeah, like a retail friendly non-KYC product where they're like wrapping these up, that's a bit more interesting, I guess. To your point, could be a regulatorily impacted product. But as we've seen with things like, some of the products and like funds that they've mentioned, like Athena and USDE is like effectively a fund that's wrapped up in a stablecoin that's non-KYC that you can just access on chain. So I don't know. I wonder if just getting sort of ahead of the tide that people maybe sort of expect is coming. It seems, at least, I mean, maybe in the US, maybe in some other jurisdictions, like that's kind of where things are leaning. It's just not quite like written into stone just quite yet. So yeah, I mean, one angle there is to just get way ahead of it. And if you're early and you can kind of capture up some of that market share before anyone else does, that it puts you in a pretty strong position.
I
we'll have
agree
to see.
you.
But it does sound interesting. Well, I'm curious to see what that product looks like. Before we jump in anything else, then I want to do a quick shout out to our sponsor for today's stream. Where's my notes? Aptos. Bitcoin DeFi is heating up on Aptos with nearly 400 million in BTC assets on chain. Aptos users can now earn yield on their Bitcoin via Echo, aBTC, and OKX xBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Let's get back to it. Were you using this one? You were. He always disappears during the ad reads. It's something I can count on. I probably should just leave it on my face every time.
I can't speak about what I have to do, so
unspeakable things. Well, I guess some of the other topics, something I guess that I think we should talk about. We talked about MegaETH last week. The sale's ongoing. Sale completed. We had like
completed.
1 point.
Auction is done. Now
over $1 billion in capital.
How much allocation they're gonna give me?
Yeah, TBD. I think we probably got a couple days, maybe a week before that shakes out. So we'll sort of see how it ends. I don't have that dash in front of me, but I do know, for example, that enough funds went with the lockup, either in optionally or non-optionally if they were US based. So there's maybe an interesting scenario where MegaETH could allocate the entire sale to like locked up for 1 year participants. I don't know if that would make sense from like a liquidity basis. You probably want to have some people trading the token day one, unless they've got other allocations that are going to end up being liquid.
Or Monad? Or MegaETH?
For MegaETH from their sale. But Monad we haven't talked about, but it's kind of on the timeline with their airdrop checker, and that the checker is complete. So I think people know how many Mon they're getting now. Seemingly, according to Keone, 10 billion supply. I think
No, 100 billion supply.
Is it 100 billion?
Yeah.
100, maybe you're right.
No.
I forget. Was it 10? I think it was.
It's
I think it was 10. Is it 100?
No. He tweeted out like months ago that it's 100 bill.
You're psyoping me right now.
I'm not. I promise. Why would I psyop?
Oh, it's okay. It's 100. It's 100. It's 100. It's 100.
Yeah.
It's 100. I misremembered.
Everyone pissed because it's like they gave chips to people.
Yeah. That's what I was wanting to talk about. Is like the sentiment is pretty, I guess, poor right now. But I think maybe I'll quote Westy a little bit. But I think they have thus far, maybe like the expectations management has not been in the proper direction. I think for a long time there was maybe like a quiet expectation that there would not even be a Monad airdrop. It was kind of like questionable if that would ever come to fruition. And then just recently, past few months, it was like, okay, there will be an airdrop alongside the token, alongside mainnet. And then they started getting very loud and noisy about the airdrop. So then people, I think, got like quite excited and rehyped for it. But now I think with the reveal and the known supply and like the current kind of like pre-market valuation, people are a little deflated.
Can I say something?
Yes.
I don't think that there was any scenario where anybody was happy with Monad. And this is like, I'm not trying to be a dick to Monad. It's just like objectively, people were never going to be happy with Monad because they raised a lot of money, and I think that's literally it. They raised a lot of money and they kind of signify something that has changed since last cycle. And once again, I don't think this is Monad's fault. I just think like they're a product of, I don't know when they raised. Let's say 21, 22.
21, 22 maybe.
They raised. But they raised it and they announced whatever. But now we're in a completely different place where like valuations are much lower than they, and people forget like this was the same thing with, I think Starknet launched at 30 bill. Can you imagine if an L1 launched at 30 bill or L2 launched at 30 bill? Like this just was a completely different time. And that's why like I'm not particularly happy with my Monad airdrop, but also like I can't complain that much because I literally didn't do anything. But I don't think you would have ever made anybody happy with the airdrops, because even if you do a public sale, you raised that 2 bill before. You raised 250 at 2 bill. So you've already raised a lot of money and you can't undercut people. Like you can't undercut your whatever the last like Series A, Series B, whatever. Who raised that 2 bill by 50% and raised that 1 bill. And if you try to raise that 1 bill, people would still be upset with you. They would say, why did you guys raise? You already raised 215. Well, why are you raising again? There's like the only thing that Monad can realistically do is launch the token and just work towards building the chain out. There's other teams that I think like MegaETH very clearly could have fucked things up. Because they could have gone from good to bad, but I don't think Monad could have ever gone from bad to good. And this isn't like, again, I'm not saying I don't like Monad. I'm just saying like because of the product that they are when they launched, they're always like going to fight against at least in the initial days, I think they're always going to fight a little bit against like this reputation that I don't think they should have. Like, it's not their fault that they decided to raise in 21-22. It's not their fault that they had to rebuild the EVM from scratch, basically, software and hardware side. It took them a long time, not their fault at all. And I just like, a lot of people are going to complain post airdrop. I already know it. And they're going to say Monad scam. But it's like, it's not that, like, do you see any reasonable scenario where Monad could have been like,
Yeah,
could have been
I think the only positive outcome you get is if you launch whatever version the chain is at and the token like 2 years ago. Because
Yeah.
but even then it's like you're still going to suffer the same problem, which is what I think you're basically describing, is that all of these chains, basically all these big L1s that raised 2021, 2022 and maybe have done bigger rounds since then, but raised then on like, the kind of hyped expectations of the market at the time. There's plenty of examples: Aptos, Sui, Monad, bunch of L2s, right? If you launched, then you gotta like you said, Starknet, crazy valuation. If you launched like early enough and there was still like this kind of overinflated kind of balloon of expectation around what those things were worth, and maybe it's not really that there was so much of a balloon there, but just like the way that the tokenomics were structured, so much of the tokens were sold to insiders, and there's limited kind of public float, so it can kind of trade to whatever price. But either way, then the market kind of comps them all to each other, and then you end up with T at 20 and Starknet at 30 and what have you. The fact that you're launching like kind of post that period, then yeah, like the airdrop and the token valuation aren't going to live up to people's like prior standards of how big those numbers used to be or could be. So I agree with you on that point. Like, there's kind of no winning there. And then like, yeah, in the scenario, like let's say you launched earlier and you launched at the $30 billion valuation, then it's like, then you'd be, fighting downhill, just unlocks and as sentiment has sort of changed on these networks. Unless they really just like, here's the scenario I'll give that's like kind of the bull case if they launched earlier is, there hasn't really been like a chain like this, EVM activity, like meme activity, kind of shifted over to Solana because there wasn't really like another appropriate place to go. So like if Monad were a live chain in 2022, like maybe you could argue that they could have been a house for like some of the speculative trading activity to go to over Solana, and it's like EVM compatible. So maybe people would have been more willing to go there than go to Solana. But I don't know. It's hard because it's entirely hypothetical. But there is a case there where it's like, maybe if there's a high throughput EVM chain in 22, the speculative meme coin game goes there instead.
Yeah, that's a good point. I guess like there's two things here, right? First of all, like kind of agree with you, kind of disagree, because we've had other chains launch in 2022 that were supposed to have some parallelized EVM format. That like early iterations, like think about how many EVM chains died out in
Yeah, but they were bad though. Like, let's be real, they were awful.
Yeah, but like, okay, like off the top of my head, Starknet isn't particularly a bad chain. They're just an L2.
It was not a high throughput like.
No, but neither would have Monad been back then, like 2 years ago. I mean, it clearly took them 3 years to build something because it took them 3 years.
Yeah, I mean, it's like a difficult problem. So
yeah, the second argument here is like, and I think this goes with not just chain. I think any product question you can ask: is it worth shipping a V1 and iterating on it, or is it worth shipping like a V3, but 2 years late? Like, what's the ideal outcome? And I mean, like, taking off my hyperliquid bull hat for a second, like the hyper EVM is not particularly impressive. Now, hyperliquid is still doing really well because they have their own application that generates a lot of revenue, and they're focusing on other things. But like the hyper EVM has, I think, 6 transactions per second. And that's like not like the max limit it can do. It's just like how much transactions are going through it. And that's not a bad thing. Like the chain is still fine. But like that's an example of a of a clearly not particularly optimized chain that was launched. Now they're in a different scenario because they already have something. But like, what's your gut read on that? Because like the MegaETH, like Bread constantly shits on the Hyper EVM. He's like, oh, like, our chain does 1 billion TPS, yours does 60. Yes, he's right. We'll see how much revenue MegaETH makes, and I hope they make a lot because I have exposure. But you know
Thoughts
what
on
I'm
the
trying to say?
strategy?
Like,
I would angle and I would lean towards launching it sooner at a diminished state, if you want to call it that, or just like, it's not a fully developed, but then these things are never fully developed. So like I would always be in favor of just like launch it sooner, because here's my big annoyance, and I think part of it is like the market dynamics of the time were just so like, you can't do ICOs, you have to give all the, you can only raise funds from VCs, and like they're raising them all at stupid vals because the market was stupid. So it's like, to that end, it's like a very impossible position that a lot of these tokens were in, because it's like you're anchored to expectations that were just way out of the norm, and so you're going to lose that game. But I do agree that I would agree with you on the Hyper EVM thing of like, I don't want them to just sit around and like wait to deploy the thing in 5 years. Like, just drop it now and then do an update every 6 months or whatever, and it gradually gets better.
and that's what Base did, right? Like,
yeah, and that, I mean, that's what Solana did.
Yeah, like they
had freaking downtime and outages in 2021. But it's not, they weren't going to like sit around and wait to drop the network until it's perfect, because it's not how you build, your market share and your product and your brand.
Well, but there's also like two more things here. That first of all, if Monad launched 2022, 2023, they would have launched at 30 mil. They would have launched at 25, 30 mil.
Yeah.
Right. So it's like, then you're also not happy because you're launching a chain that is not as good as it will be now at a valuation 6 times higher. Because right now it's valued at 5 mil FTV.
Well,
so it's like,
I'll take the opposite on that. If they actually launched in 2022, like in the bear market, it would not have launched at 30 billion, right? It would have launched at, it's still a big number. I'm sure it'd still be like some billion number, because that's still when Aptos and Sui and all these teams were raising X amount at multi-billion. So it would still, I think, launch at a few billion, but it would have run up into the 2024 excitement of all these chains into like the tens of billions, which I totally agree with. And then, may not have been worth that, depending on how much traction they had at the time. Probably just wouldn't have been worth that based on the traction, because there's only ever been like 1 or 2 chains that have ever kind of like been, reasonable relative to their valuation for their activity.
I mean, yeah, it's the same thing with like Solana. Totally was like, he subtweeted or quote tweeted at the MegaETH guys for raising at 1 mil with like pre-revenue, and it's like, yeah, that's true. And also Solana did launch at a very low price.
Yeah, I looked it up there. They did their sale on CoinList at 100 mil.
Yeah,
it was a different market then too, so it's kind of like, like that's just kind of where the valuations are now. But I also kind of like, I kind of agree with that ethos, like that sentiment of like, me personally, I still would prefer, like, if you can just go out, launch the early, call it mainnet beta, whatever the hell you want to call it, pretend that it's not the real finished product, but like launch it now. Maybe you're only worth 100 mil today, or 300 mil. I don't know how inflated the market is right now. Maybe you're still worth 500 mil if you launch some high throughput thing with no users. But I prefer you get it out there, you do the sale, you have the token out. I can take a bet in the public market if I want to, and if I don't want to, then I don't have to buy it. But go out 3 years later and it's like essentially the same thing, because you're still launching it day one. There's no users, no revenue, but I have to buy it at 3 billion. It's like, it's just a tougher pill to swallow, just comparatively.
No, yeah, I completely agree with you. I mean, Say was at 10 bill when Starknet launched in March 24. Not when it launched, but like they both launched within that 3-month January, February, March window. No, the prices were at like 10 to 20 bill. I think 26 bill from Stark. So like that to me was like a very overvalued time. Now it doesn't feel that much. Like,
no, it doesn't.
I'm sure someone's it's tough to say anything in crypto is not overvalued.
Yeah.
When you
But
like
I
look
think
at
part of that is still like the token dynamics. It's like a lot of these are still sitting on, there's still investors who are unlocking from raises at much lower vals, and so it's like they just have this dilutive effect of unlocks that are coming onto the market, and like they're just gonna like kind of probably bleed until those unlocks are done. Can they survive throughout the length of that, and then kind of grind back up from there? That's an open question. We'll have to see, but I think they a lot of them just have to like work through that supply. Unfortunately, like that's just kind of what they're left with.
Yeah, who were the guys that did all unlock day one? Like everything unlocks day one.
All the teams like lately.
Well,
Well,
I remember this chain raised money, and it was like everything unlocks day one. I think it might have been like a ship project, but
what's interesting is that I actually think obviously like Solana still had VCs, but I think their like CoinList ICO that was actually unlocked.
Yeah,
but it like I don't think it didn't like perform immediately, right? Like the tokens kind of were getting shit on until the like COVID, pump every market boom kind of came in. So there probably was still an opportunity even on Sol to like buy it below that auction price because it probably ate some shit.
Yeah.
In the short term, I'd have to pull up the price chart from a long time ago. I don't recall the dynamics there. You're saying there's a big team that did an unlock, like all unlock like a while back?
It's like I really like one thing. I agree with you. Like you need to work through these unlocks. There has to be a better way to do this thing. Like it can't just be full unlocks to this point. Like it's I mean, just thinking about like there's like very egregious examples, but there's also like kind of not very like I would say Soul unlocks are a pretty egregious example because you don't know how much they are. And because like it's been out there for so long and the money has like the tokens have gone through so many hands, especially post FTX. And they've been relocked and they've been like unlocked. And I don't know how, like I don't think anybody really knows how much it's unlocking. Same with Celestia. Like when the like they kind of got away with it by saying not the price, but the team kind of got away with it by saying this is just how all Cosmos does it. But like it's a massive deal if token stakers, if VCs can stake their tokens and receive emissions on that and sell that. Like that's a huge, like you're essentially, I don't know what Tia's emission rate is. Let's say it's 12%. You're essentially allowing people to sell 12% of their original bag every year. It's ridiculous. And then on top of that, they start unlocks a year later. There's like very egregious examples of it. I don't know what the fix of it is. I don't know if it's like more regulation to the point that these teams have to file like whatever the crypto version of a like quarterly filing is, showing like outstanding shares and like who owns what. Because the method right now clearly isn't working. I can't tell how many like conversations you'll have with very like smart analysts or like people who manage money, and like one was I was talking about this token with somebody and they were like, well, we can't buy that because of the unlocks. And it's like a very like clear thing, and it's just something that needs to somehow get sorted out. In that, like, okay, not everybody has to pick up pennies in front of a bulldozer, but also like you know how big the bulldozer is and how like if it's worth the penny. And it's like we kind of don't know it for a lot of these things. And I also think like the reason I'm bringing this up is we're talking about multiples, and it's like clearly a lot of these multiples are very depressed because, or like very compressed because nobody wants to pick up the penny for the bulldozer.
Yeah. There's so many risks, sometimes stated, sometimes unstated or unknown. Like there's no way to know because there's no reporting, there's no documentation of it. I do agree with you to an extent. Like I don't know quite what it is. Like I mean, for now we're kind of left just sort of like self-policing, crying begging at founders like, okay, so how much is actually like unlocking every month? What, give us the real details. And you're relying on the docs to just like be correct about the mission schedule, for example, or relying on the founders to not OTC their locked tokens and just like exit the project. It's very much just like, it's funny that like people come into the space for like, it's trustless, man. It's amazing. You can just like buy and sell stuff trustlessly. And then like, unfortunately it invites a bunch of, it invites seedy people to like, raise speculative things that don't do anything. And then, trust me, bro. And then they can just kind of cash out and let that stuff burn down. I do think to an extent though, like slowly like the market learns. Like, I don't know. If you look at a lot of these, coins, it's like, I don't know who's buying TIA. Like, look at the chart. Nobody's buying it. It goes down. It exists now to be sold. And I mean, you mentioned the emissions. It's like, if those guys are, still locked up, but they're getting, 10% and 12% a year, then, they're dumping the unlocked tokens, they're dumping the staking emissions, and there's no reason to buy it. Like, if you've looked at the revenues, the growth, the scale, you need something to change there materially. They're like, people are excited about the like proof of governance thing to like reduce the emissions a ton, which would be interesting, but
fucking it's pushing it forward.
But that's why a lot of these tokens look, right. It's like they're just, they're just grinding down now on that sell pressure, and you don't have like buyers of them because there's nothing really to buy. I do feel like the market maybe is sniffing that out a little bit sooner on some projects. I don't know. A lot of recent like pretty big launches, it's maybe they have a pump the first week, but then you look at the chart and it's like, okay, this was priced too high.
I mean, the market just gets smarter and smarter every time. A lot of this blame is put on VCs, but I actually don't know how much. Like, I'm sure there are like very predatory VCs, but I feel like it's almost a team almost all of the time, like, because the team is allowing for, like, it's very short-term thinking, because you're like, oh, we will just launch a 10 bill that puts my paper unrealized value at X amount, and it's like, okay, but buddy, like, you think a year ahead, think 2 years ahead. What are you doing? And I guess, like, do you know what I like? There's a few that have been like, there's a few very egregious examples again, like IP stuff, RWA stuff. I don't want to name too many names, but like, these guys were clearly doing something that they shouldn't be doing. But like, I don't know. Like, I'll sometimes see a tweet about like whatever Dragonfly, and it's like, oh, Dragonfly are super predatory. I don't know if they're super predatory. Like, I'm sure like they want to make money. Clearly, that's their mandate. They need to make money on tokens, but I like, it's not. I mean, if somebody comes to you and says, "Hey, buddy, I'm gonna let you like make 12% of your allocation every year," like, you'd have to be retarded to say no, right?
That stuff is like explicitly bad. Like, just from the team of like, you've created a way to just like, it's similar in like Sol to doing like a pipe deal for a DAT, and it's like, yeah, man, we're gonna raise some funds and we'll just like let retail buy this thing at a stupid val, and like in 90 days you'll get to just dump it on their head for way more than you bought in for. And yeah, I think that stuff just kind of agree. It's like, you understand the dynamic, and like the way that it works is by getting people who don't know any better to like buy the thing at a bad valuation for them, and then dump it on their head. Like, objectively, that's just
everybody who doesn't know better is not poor. Like, they can't buy anything, and everybody who knows better is like either super cynical, like James and Noah, super cynical. Because they've learned, like, or like they already knew that you shouldn't do it, or it's like people who very clearly just want to get in and out of a position for a week, maybe 2 weeks, maybe a month, right? Like, maybe you're holding something for a month, but the rest of the time it's like a designated 5 tokens that you are always holding, and they're either like already fully diluted. Aave, Maker's not a lot of people own it anymore, but
maybe. They kind
or
of changed that whole one up.
yeah,
With
or it's
going with
like
Sky and
tokens that have some existing buy pressure or Bitcoin. Like there's
when you
I
can like
haven't
point to
heard,
the flows. When you can
yeah,
point to
I
the
haven't
flows. 'Cause-
heard
Yeah.
exactly, or like there's a very clear like underlying bid that is coming from the protocol itself and not from, like, because even that's it's really just Bitminer and master MicroStrategy left. Strategy now, sorry, there's nothing else. Yeah, I can't remember the last time somebody was like people will bid these like MegaETH style of things. We'll see how MegaETH turns out.
I think they're in a
But
tough position. Like
yeah,
my internal mental model for these,
post
and this is
XPL especially, all of these
XPL
new
as well.
ones are in a tough position because
It-
XPL was, everybody loved it. And then it kind of disappointed a lot of people. And this isn't like the team's fault or anything. They have to incentivize people to come on the chain. Like if you're going to become a DeFi chain, you have to emit. You can't not emit. And they're like in a weird position. But like post XPL, I feel like nobody really wants to bid that much into these like non-designated altcoins. And designated altcoin, I will say, is like Pump and Hype as the biggest ones. And then maybe like Aave, like I mentioned. I'm sure there's a bunch of people in Camino, bunch of people in Camino, but apart from that,
even Pump people don't want to buy it.
People don't want to
protocols, you're using the revenues to buy the coin, but other people seemingly not wanting to buy it. But I agree with like the mental model for a lot of these, I think now is just, and it's not really like, I can't really say anything about the teams based on this. They're just following this model, which is basically like an IPO model at this point. Is some amount of people can have, can get exposure through a sale. They're unlocked day one. It pumps because it's like maybe a hyped project. Those people are instantly up. They can sell. After that, like speculative period ends, we find out that, just generally still all these alts don't really have like continuous natural buyers, and then they just kind of trend down because their vals are just tough to tend with right now.
Yeah,
and
increasingly,
it's similar to a lot of IPOs. Like if you look at IPOs and crypto IPOs, like, sure, there's some that pop and just like grind up and up and up. That's probably the few and far between. Maybe it's like, I mean, it helps that if it's a real business and it makes a lot of money, and then they're, they expand revenues and they grow a bunch like year over year or something, then that could make sense for a big continuation in the stock itself. But I think we see it broadly with like, I mean, especially the crypto IPOs lately too, is you get the pop early and then they kind of grind down. Gemini is a good example of this.
I was just about to pull it up. Like, yeah.
Oh, perfect. Look at that.
And if you compare it to like everyone wanted to launch a crypto IPO post Circle because it went up what? I don't know.
It feeds the speculative, like I mean, we're a bunch of degens. The market wants the speculative stuff. Like people want to trade that, like the exciting new action. But when the new action is like the old action, it's nobody wants to trade it. You're done. It's like nobody's a holder of those things. They just want to trade the speculative movement.
Yeah. I wonder how many people think of things in terms of, because there was very clearly this time period in 22, 23 when everybody was posting these massive narrative sheets. But I wonder how many people are actually like thinking about this in terms of like, okay, like we've done one IPO, we've done two IPOs. The first one did a 5x, the second one did a 2x, the third one only went up 30%. Should I be bidding the fourth one? Right? Like, I wonder how many people are, because like you're not bidding the sixth Olympus fork, right? Like, or whatever. Like, I think people still bid the.
I mean, in 2021 you were, but not today.
2021 you were, but like now I feel like every 4 months someone comes in and says, "Hey, like we're actually going to launch Olympus, but we're fixing it up," and then it's like it just doesn't go up, and like it's the 25th Olympus fork. But sometimes maybe it's worth thinking, like, am I bidding the 20th Olympus fork? Because a lot of the times, like Olympus is a flawed concept in general, but a lot of these things somewhat resemble it in the sense that people make money on X, then they make, like, people make money on the first one, the second one, the third one, the fourth one maybe, and then the fifth one, you got to give it up.
Yeah.
I wonder how many tokens you can just like cut out of like all of your lists because it's the fifth one, and it's probably not worth bidding anymore. We had this with perp dexes just like a month ago. Like if you were bidding the sixth perp dex variant, you were cooked.
Yeah, there's I don't know why that's such a. I mean, maybe it's kind of a thing in all markets, or maybe just particularly with like retail people. But you look at like the alpha or like the leader in a segment, and you go, man, already pumped, and then people just go down the list of like what's beta to that, to try to like catch this like wave of next pump on this idea. And it I think it ends up being funny because a lot of times, like in many cases, the best idea is actually to just like bid the winner that's growing and it's having success, and you can chart out the path for them to like continue having success versus like, okay, this one is losing and it's beta, but like maybe it'll pump really hard because it's beta, and people will also think like, wow, this is beta to this other thing, and maybe they'll bid it.
We just did our, as you know, because you were part of it, we just did our like QD, our quarterly decision reviews, and this was by far the biggest thing that we noticed is like, if you are writing about something because you're like, I think the big example we resolve, and it did go up a bit, but like the clear bid was ENA at that point when it was going up, because ENA ended up going up 30% and Resolve went up 6%. Or like there's like a million examples of this that we have internally where it's like some of them we just don't publish because we're like, you know what, I think we're like, there's no alpha here, it's pure beta, and it's probably not even going to go up. It happens a lot. Like
I think it's because it used to be, it's like an artifact of how stupid the market used to be. It's it's a lot of this stuff is still just like people's brains they've not like readjusted. Everyone needs to like take a freaking shot of something to like clear their brain of how the market interacted in 2021, because it's like something would pump and then you could think like one further step of like what's the next beta, and you could bid that and then it would go 5x the next week, and that just like does not happen anymore.
Yeah, and like part of this is also 21 obviously, but also I think a lot of people intuitively know some of these things. They're like, if like something goes up 3x in a day, I should sell it. Or if I'm bidding the third derivative of something, I should probably not buy this thing. It doesn't make a lot of sense. Like if you take like 30 seconds, you know it. But crypto is one of those like, cause of 21, like when you're bidding stocks, you never think like, oh, this thing is pumping already, so I should be bidding like a micro.
Time to go buy something else instead of Apple.
Yeah, like without even looking at any of what they do, like not even taking a look at what they're building, how much money they're making, how much money they're losing, what they're emitting, everything. You're just like, yeah, this one thing is pumping, therefore I should buy the fourth thing that is somewhat related to it. I think, I don't know. So I imagine you probably also struggle with it, because I struggle with it as well. Sometimes I have to like hold myself, and sometimes I just straight up make the mistake. I just like buy something, and I'm like, I shouldn't have bought this. Like it doesn't make any sense. And then like the day after, it goes down or it goes up, and I'm like, you know what? I really shouldn't have bought this thing. Like it makes no sense to buy this thing right now. But 21 is so ingrained in your mind that you're like, everything can go.
Yeah.
If something goes 10x, the logical thought shouldn't be, the industry, like the sector leader went up 40%, therefore my token should go up because it's smaller market cap, it should go up 400%. This is not a logical way to think about things at all. I
think I think I worked it out on my system like in late 2023, early 2024, because I think I still had a lot of that same like, you know, I was long Sol and like Sol ecosystem stuff, but I still had some of the stupid ideas in my head of like, oh, I need to like put a little bit into like all of these different like silly like on-chain app things. Like, on-chain OnlyFans and like on-chain this, that, and the other thing, and like
I also bought
this. Yeah, but it's like I need to put it into all of these like different things to like maybe to get some like extra beta out of the Sol thing, but it's like just didn't really need to do that. Like just there was definitely like some outperforming like beta. A lot of it was like memes. There's some of the DeFi stuff went up a higher multiple than like Sol did, but a lot of those like other silly things from kind of the last cycle games just maybe they caught a pump because of all the people who had that mindset of like, oh, I need to like shove into these silly little things, but it's not really the case anymore. And I think more so now, especially like this year, 2025, I think it's very much been, there's very few winners. So you either just want to like be allocated to those ideas, and then everything else is pretty much like this narrative rotational thing. And if you're holding it longer than 3 to 7 days, unless you have some like super early info, I don't know, if you got insider info and you can be, a week early to every 2 weeks early to every single trend, you probably shouldn't be holding these things for that long.
Yeah. This is Erla tweeted about this, who's always been, I don't know if he's always been, but he's a pretty smart guy. But his like tweet was, do you know that manager tweet that's like there's free money five times?
Yeah.
Like there's free money on the floor 5 times a year. And like I completely agree with this. It's Erla saying that it was like an understatement back then, but right now it's 100% curated. It's like in 21 it was actually free money like 300 times a year on the floor, versus now it's I think very clearly like 5, 6, whatever, something like that, maybe even less. Like I can't.
It's
There's
a few times.
Yeah, there's a few opportunities that you really want to like allocate heavily to, but the rest of the time I think you really just want to be like.
Yeah, I think this year it's been these sales, like the actual sale itself. If you can get in like the round, like pre-public, and then get the free upside to public, like that's been like that's kind of been like the free money multiple opportunities this year, where if you had access to those, like I understand not everyone has access to those unlocked deals, especially if you're a US investor, etc., or maybe you don't have the size or what have you. But those have been kind of the free ones, and like allocating to pump and just holding it, like you're flat. So but if you bought it at 4 and sold it instantly at 6, like you got an instant 50%.
Yeah, stuff like
that's
that.
kind of how those have gone.
Yeah. Do we have anything else? Or... Oh yeah.
I do have one more thing I wanted to talk about before we do that. I do have to do a shout out. I want to shout out our sponsor for today's stream one last time, Aptos. With nearly 400 million in BTC assets on chain, supported by a secure, fast, and affordable MVM environment, Aptos has become the BTCFi growth chain. Aptos users can now earn yield on their Bitcoin via Echo's aBTC and OKX's xBTC without the typical bridge risks and high fees. With support from Echo, OKX, and Stex's SBTC, Aptos is the place to go for best-in-class yield on Bitcoin. Appreciate the support, Aptos. Thanks so much for sponsoring the stream. There we go.
I'm still here.
One last thing I wanted to talk about before we call it for the day is my screen's not pulled up. Let me pull it up. If you saw this Coinbase earnings call, I thought it was kind of funny, but maybe just the commentary on some of these prediction markets. But the other day, Coinbase did earnings, and during right at the end of the call, supposedly what happened is some Coinbase guys sent over the mention markets or the prediction market to Brian around what words would they say during the earnings call. And so right at the end of the earnings call, he just listed off every word that was listed on the market that maybe he hadn't said yet, or maybe he just rattled through the whole list. If we can. Yeah, so quite literally just pulled it up, listed all the words off. I think it was a pretty small market. I didn't look, but I think it was very, very low volume. So if you had yes open on any of those words, like you probably just got a free like $1 for your couple pennies that were in. The downside here is like, I think objectively, like the market like that doesn't make sense.
Yeah, it doesn't. This is
That's like you're getting yourself set up to get trolled by a CEO like Brian, who's gonna forcibly take the other side of you.
yeah. This is so. There's two. I'm gonna big shout out to Effort Capital, who said one thing that I've ever agreed with in my life with them, which is that they're like prediction markets for everything makes no sense, and it's exactly this. The second thing is there's a price. There's an amount of money that you can make on a prediction market of like a political figure assess. And this is something that we talked about when the prediction markets were like everyone was like, oh, did you know this? But so I'm gonna be that guy now. But there is like a amount of money that you can make where you fulfill it. And for Brian Armstrong, I imagine there's not any money and he just wanted to be funny. But yeah, I mean, it makes no sense like to do prediction markets on something that, especially with like tech CEOs, because they're very connected to everything, obviously, and they know what polymarket is and what's happening. And they have guys on their like floor who's probably like putting $15 into whatever that market is to make $30 or something.
Yeah, and I'm sure like someone's gonna come with this counter argument of like, now that Brian's done it, the market can like accurately price in the risk that like on every earnings call from now on, he's gonna say every word on the list, and it's like, sure, man, but like objectively, if you're trading these, like that's just not like an interesting market that you want to trade. There's just like you're taking a coin flip on whether or not Elon is going to go on Polymarket during some call and just like list off all the words that people are gambling on, whether he'll say them or not. So yeah, I mean, I agree with you, and I agree with Effort Cap. Like, prediction markets for everything. Like, there's just things that aren't going to make sense. Like either as a user or as a trader. And maybe the case where they do make sense is if you have inside info. Like if you knew Brian, even in this case, the market was so small. Like, sure, maybe you made $100. Like, good for you, bro.
I like that on this pod we've decided that the best way to make money in all three situations that we mentioned was insider trading. It's gonna look very good, and Ryan's gonna be very, very happy with the pod after he sees it.
Hey, sometimes that's how it is. I think a lot of people are commenting on the equity markets as well, with Trump and the U.S. government making acquisitions here and there. Also pointing out insider info is quite valuable on names that are getting like single day 30% price moves on announcements of like U.S. government taking a stake in big companies. So
yeah,
what are you gonna do? Well, we can call it there. I think that was all I had. Unless you've got any last words to say. Maybe one last shout out, actually. Let your newsletter shine. We didn't talk actually about MetaDAO specifically, but we did talk about kind of the difficulties with a lot of tokens, the bygone era of 2021, 2022 tokens, and like the structuring of those, which are very problematic. I do think MetaDAO, Futarchy, maybe more so these unruggable ICO style, and leaning in the direction of like rights for token holders, is a good angle. It's great to see teams kind of working on these types of ideas, getting rid of the like dual token equity issue, getting more towards tokens actually having value. So if you are interested in reading our MetaDAO report from Carlos, what did Ryan calls him, the Sultan of Solana? I need a good name. Need a good nickname for Carlos. I don't have a good like nickname for Carlos, but I think he needs one. But he wrote a great report on MetaDAO. You can get it. Check the link in the show notes. It'll sign up for the 0x Research newsletter. Hear from the analysts. They write every day of the week, and you can get access to that report for freebie.
It's like it's actually good to the point that I don't think you need to read. Like, I don't know how people consider news and newsletters in forms of investment. Like, I know some people have very, very different ideas. Some want like just essentially news, and they just want like an overview of what happened. We let the analysts take like give their actual opinions on what they're looking at and what they're interested in. A lot of the times this leads to the newsletter being transformed into a report for the Blockworks research product, and sometimes it leads to the Blockworks research product being transformed into a free report through 0x Research newsletter. But in either scenario, I would just, there's a lot of very, very good newsletters out there, and there's a lot of very, very good news channels out there. We have like all of the macro ones, all of the news ones, crypto specific news ones, all of the like whatever wallet movement ones, etc. And there's a million newsletters out there. I think our one is objectively very different to what is offered currently. I don't think it's for everybody. Frankly, like I genuinely don't think it's for everybody. I think some people genuinely prefer pure newsletters, which is fine. If you're more interested in like analyst spots and what we're explicitly looking at, and like what's like top of mind for us, as well as like some general market commentary on indices, the market, and like some reads that we're doing, like what we're reading into these days, ranging from like other people's valuation and models and reports to their like thoughts on whatever prediction markets, etc. You should check it out. It's pretty good. I look at it every day to check it, and I also read it every day because I genuinely think it's useful for me. So yeah, I would say check it out. We'll put it in the show notes. I'll make my producer do it, and then we'll also beat up the producer because he wasn't here on this one, and we had to do it all ourselves.
Hell yeah. MegaETH report, 0x Research newsletter. Check it out in the show notes. Get access, get plugged in. Hear from us every day of the week. You already hear from us twice a week on here. You can hear from us 5 more times a week on the newsletter, like Bach just said. So if you're interested, check it out. We'd love for you to read what we're talking about. Otherwise, I think we're good here, Bach. We can call it for the week. Enjoy the weekend. Maybe touch some grass. It's kind of, I don't really want to touch some grass right now. It's been a bit rainy, so I might stay relatively inside.
But it's Halloween. You're not doing. Oh, we should have put on costumes.
Oh, it is. No. It is, dude. I forget. This is not like a. It's an interesting thing. Like So here's what I'll say. I'm not doxing my location or anything, but we don't live in an we don't live in an area where people can come trick or treat at our house. Like, there's no sidewalk. Like, no kids are walking up to our house. I'll just be quite frank about that. So we don't have trick or treaters. So this is not like a holiday that I prepare for in that respect compared to other Americans, maybe. Yeah. So yeah, this one catches me by surprise. I forgot that it was even today.
Yeah, I'm in Europe where Halloween is much smaller than I think people expect it to be. It's very much an American thing, I would say. What
about Christmas though?
Huh?
Christmas?
Yeah, it's a big thing. Christmas is big.
Yeah. That one's it seems more global. Like even some of the Asian countries, like
we
Japan does Christmas, like, which is interesting to me because they don't even like Christianity is not a like really a thing there either. So it's kind of transcended the religion part. It's very much just like a holiday.
But Halloween never did for some. Like I would say, Thanksgiving is 0% a thing here. It's not a thing here at all. Like anywhere in Europe. Halloween, I'm sure there are places that do it. Like when I was growing up in Turkey, we did some Halloween stuff, but it was very much like borrowed from everything American, and to the point of like it wasn't an actually big thing. Even growing up after that, it was not really particularly a big thing. So
what about my guess would be Valentine's Day.
Big. Yeah.
Yeah. You know what I mean? I think there's a clear thing here where it's like, oh, you give gifts on Christmas, everybody loves gifts. Oh, you give flowers and chocolates and whatnot to like, significant others on Valentine's Day. Everybody loves Valentine's Day. You know what I mean? This is like a more global thing.
Yeah. So like I grew up Orthodox, which is like our Christmas is on the 6th. Some celebrate on the 7th, like of January.
Yeah.
But everybody I know now who is Orthodox and who has kids, they celebrate 2 days. They celebrate on the 25th with the rest because they want like their kids to be part of this grand like Christmas tradition of basically giving gifts and like walking around in the Christmas, because by
Yeah.
January it's too fucking late. Like there's nothing to do. And then in January they do like a religious thing. I think Orthodox tend to be a little bit more religious, especially compared to Americans. Maybe Catholics.
Yeah. I want to say I know some. Yeah, I mean, I don't. I mean, this is maybe outside of the spectrum of the show, but I think like religious beliefs have been declining a little bit in like Millennium and Zoomer things. So I think it's definitely more about like just Christmas for the presents type of thing, and not about the religion at all for most people. But I will say I have had like some Serbian and Romanian, Ukrainian friends growing up who I would assume, based on what you just said, were maybe a little more Orthodox, who would do like double Christmas, or even some like, maybe Jewish, or like have some Jewish in the family who do like Christmas and Hanukkah type thing.
Yeah.
Definitely common.
Yeah. So I think Christmas is less religious and more like a gift giving thing.
Let's do some
It's
gifts.
just
Yeah.
nice.
Everybody loves gifts, man.
Including me.
Send us some gifts. I'm not going to tell you an address, but just send them. All right, we'll call it there. Touch some grass. Enjoy maybe some time off of CT on your weekends, or if you're just locked in and you're trading, then I guess do your thing. We'll see you next week. We'll see. Do we have any exciting guests for Monday? I know we have CMT Digital.
Yes, we have the CMT Digital guys on Monday. No, on Friday. And we have James Christoph on Monday.
That's right. How could I forget James Christoph, friend of the show, coming on Monday? So next week's going to be great. James Christoph on Monday. We'll have CMT Digital guys come in to join us on Friday. So it should be an exciting week. We'll stop rambling. We'll call it there. Thanks so much for watching, guys. We'll see you next week. Appreciate y'all.
Peace.